Everybody, 8:40. It's April 7th. I'm excited because I get to go to North Carolina tomorrow. That'll be fantastic. I'm going to be spending some time down there working on a project. But real quick, let's talk about the state of affairs in the market and let's talk about this reading. So, first off, yesterday, I apologize and I realize I'm not sharing my screen properly. Let me take care of that. Make sure you can see me because everybody wants to see the guy who does not know how to comb his hair at 8:40 in the morning. All right. So, first things first, we had a data reset yesterday and we had tried to code something in this site where it would tell us in the event that something went down. We've had, a couple emails suggest, hey, the data feed is locked down. If we're away from our computer, we need to be able to go in and take care of some things. I'm going to remind you that we did not intend to launch this until August, but due to popular demand, we did. And we really thank you, guinea pigs, because we are going to be working through a couple of small issues. But that said, little things like the fact that this says day two bullish, that's obviously not true. Day two bearish, obviously not true. We've been in this pattern for a much longer time. We've seen persistent weakness in this market. But I do just want to note, we're going to have these growing pains. It's going to probably take a little while. We're still working on this. So bear with us. I apologize for, being down for about 2 hours. But in the event that that happens, don't worry. I'm there to provide emails and support. And always remember that you have triples here as well. Triples did not go down yesterday. That actually held up. So it was more of a coding issue over on the Capital Wave score. But that said, that's the first thing. The second thing is the obvious question of, okay, Garrett, this saying plus 12 on the Russell. What's going on here? Well, this is pretty simple, right? On an equal weight basis, the weekly momentum score, and this is a weekly momentum score, that's very important to note, is slightly positive. The more stocks are breaking out than breaking down. Now, we are seeing on the market a relatively sharp rebound in the Russell. It was a pretty sizable, sharp move, 4% in a week. But if we look at the TNA, right, the small cap bull ETF, looking pretty solid, pushed back above that 20-day moving average. And I will always remind you, good things happen around the 20. Good things happen around the 50. Good things happen when that 20 and that 50 and that 100 were above these key levels. So I want to note that you're going to see a lot of these scores align with those figures because those are key technical levels. It's just kind of one of those things that pops up. It's why I always remind you to watch the FNGD, because when we're around that 20-day moving average, that is a key line in the sand for all of these leveraged ETFs. I have to have some conversations relatively soon with my friends at Direxion and micro sectors to really truly understand what that is telling us. But for the most part, we see relatively sharp directional moves around these key moving averages. And I will remind you that we are not out of the woods, even though we have this little positive signal that has happened this morning. We're kind of looking for a market reset, and it just so happens to be coincidentally around this Iran figure or Iran event. Now, we did see Ed Yardeni, who I highly respect, saying that the bottom was in. We saw HSBC say the same thing. And we're seeing, movement on our signal that is kind of back toward equilibrium. But that does not answer the next question, which is, why isn't that green? Okay, so first up, on a cap weighted element, the larger Russell stocks are pulling the Russell higher, or have over the last week. And we've seen a sharp kind of V-like structure to the rebound on the short term. So that is skewing data a little bit, largely because more stocks have moved in 5 days upward in a weekly pattern than moved down, which is good, but it doesn't tell us about the sustainability of it. Really, what this is telling us is about the probability of holding up, which is why it's kind of hanging in this yellow territory. The other side of this is buried in the screamers and crashers. And I've talked about this in the past, but we have it down here. And this is the CW, the weekly, monthly thresholds. So this is our weekly score. And we pay much more attention to that weekly score, looking for confirmation of trend rather than just reacting to daily changes. But daily changes is quite important in the world of momentum. The monthly trend is still obviously down, and the daily trend is still down as well. That is the pulse figure. So the monthly equal weight is still solidly negative. Most stocks are in downtrends on that monthly time frame. And obviously, we want to note what the changes have been in daily positive and negative. If we look over at the S&P 500, the same thing. That score is actually quite negative on a cap weighted figure. That is on the daily side heading into this morning. As we noted, this actually improved a little bit yesterday, but these are the stocks that are in solid pulse movement, very solid moves today. Humana and UNH on the backside of that news that there's going to be, I don't know, they're just going to write a blank check, I guess, to the healthcare sector. But the weakness still persists exactly where we have been focused in the private equity space, in the consumer space, in the brokerage space, in the insurance space, in that WY named the REIT, the agricultural lumber REIT WY. So what are we looking for? Both pulse numbers need to flip positive. That means enough stocks sustain a weekly bounce long enough that the monthly trend turns up too. And right now the weekly is recovering, but the monthly hasn't confirmed anything yet. That has set us up for divergence, which is exactly what you're seeing right there in the Russell. The screamers positive. We're only taking a very small percentage. Obviously, in that figure, we take more of the crashers because of the upward bias of the market and the amount of capital that continues to move into the market every 2 weeks through passive flows. Just remember that this is a process. There's a lot to it. I could just give you a green and red number and you could go, okay, Garrett, that makes sense. But a lot of people ask questions. So I'm taking you through the terminology. I'm taking you through some methodology. There's a lot to this. But at the same time, just recognize that we're looking for Pulse and CW to flip as well. That said, here we sit, still sitting negative, still sitting in an environment of high concern. Yardeni making that bullish call. I think that matters. We are looking in the next 24 hours for direction from this market. And the reminder here is pay attention to what we are really doing here. We had a sell-off that started back here in January, right? That's where our signal went negative, January 28th. We're moving into a yellow territory here on the SPXL. This was at 234. Now we're at 192. The reading is treating the conditions the same, which is very important, which means that if we now have a positive signal and the market starts to ascend once again, you weren't entering at 232. You were entering at 192 on the SPXL. And it kind of just resets the market based on those weekly and monthly ratings, looking at the strength and flows of stocks. And it is agnostic to the period of the year, the conditions of the year, the seasonality, whatever it is. What we're looking at all given moments is we've just had a sizable sell-off. Is momentum going to start to return to this market? Or is this part of that 1% pattern that we have discussed in the past where we sell off, we have a little bit of a squeeze, we hit that 20-day, and then we dump? That's the danger. So let's just be cautious and cognizant of these things. And we will ride through all of this together. Real quick. Capital Wave side. I don't know why it's called that, but that's what we're going to call it. We're just going to figure it out. It's supposed to be Money Printer Pro, but sometimes you use old templates because, well, you're running late. Dollar is around 100. That's obviously bearish. If that continues to rise, WTI pushing to 115, Brent 109. But futures down, elevated on the VIX back at the 25 level. This is headline to headline trading, and this is a reminder to be focused on volume weighted average price. Looking at those key 3-minute charts with the 8 and the 20 adjusted on those charts. Simple moving average, exponential moving average. I don't care what you do. But Trump's saying 8 p.m. tonight is final. Oil hasn't reacted in any meaningful way. The market doesn't trust the ultimatums anymore. That's important. It is also Tuesday. We have all been instructed by previous behavior, Pavlov's dog, to not trust that situation. Even with a deal, do not expect oil to snap back. Infrastructure damage across the Gulf is extensive. And I continue to remind everybody, think about where this is going to be in 6 months, regardless of whether or not there is peace tomorrow or this war goes on another 2 to 3 years. The reality is that food prices are likely heading higher. Fertilizer prices are going to remain persistent. At the same time, capital flowing into the United States, infrastructure and LNG, possibility of trying to increase our fertilizer production here in the United States. There's no reason not to if we have the capacity and we have the tools for it. On top of that, where will capital flow? It will likely flow out of the Gulf Coast countries. That is a highly leveraged area of the world. And now the question is, where does that money go? And a lot of points would suggest it would come here or to places that I've talked about in the past where there is high level of economic security, economic freedom, and strong natural resources. Because once again, this war and this situation is a solid reminder that we need stuff, real assets, real things in a world that is built on financialization and never-ending speculation. We still need things at the bottom to ensure the stability of it all. And in a world that is continuing to bifurcate, good word, in a world where the West is splitting from the East, the focus on raw materials is more important than ever. China has a 20-year lead on everybody. They have been building strategic assets and hoarding resources for 20 years as if they are going to war. And the reality is they have been. It has just been a quiet, silent resource and capital one. On the 1% pattern laid out as we have seen, we pulled right back up to that 20-day moving average, and that drew in the last willing buyers. So we're sitting at that inflection point. And if we have an acceleration in this war, the downside is clear and the flush can easily happen. So that we either have the next leg lower and we set up the real problem, the FNGD breaking under that 20-day. It needs to break the 100-day with authority before we can really call it a turn. And the FAC in the banking space is in a similar spot, closer than weeks, but closer and confirmed are very different things, right? Closer than weeks and closer and confirmed are different things. So just be aware in this environment that we have seen rebounds very similar, comparable to where we were back in April of last year, but we've also seen hit on that 20-day moving average and a rollover to take us much lower. Key headlines: yields remain flat before this deadline. The bond market really isn't doing anything. I think everybody's just in wait and see mode. BN Mellon and Hood on Trump accounts. BN named a financial agent for Trump accounts, partnering with Robinhood on the investing app launching July 4th. A lot of focus on that SpaceX IPO heading out a couple of weeks. Key thing here is, where is the money going to rotate from on the size of this IPO? We'll talk a little bit more about that. I'll probably do an article on it soon. Who are the winners and losers in that IPO? April is historically strong. It's the second best month for stocks. You have tax funds hitting wallets. You have systematic selling starting to dry up. Goldman sees potential $20 billion in inflows. Iran has rejected that ceasefire. We discussed that. Broadcom, huge news with Google Anthropic, a huge deal for 3.5 gigawatts of power. Stocks continuing to run higher. And that is very positive for AI names, largely because we're looking at that CapEx right now and trying to get a better sense of how real is this. This is one of those positive figures. Trucking rates hitting new highs. Once again, this all goes back to diesel. It is a reminder that virtually everything we touch ends up on a truck. Don't celebrate everything yet, right? Divergence weekly covering. Monthly has not confirmed. 9 of 11 sectors are improving right now. We have more breakouts than breakdowns. We have 5 screamers and 8 crashers. The squeeze continuing to build in healthcare. We saw a lot of movement on the LABU. Pharma names, now we're seeing it in the healthcare space with Humana, Merck, and United Healthcare. Consumer defensive still under pressure. Private credit still under pressure. A lot of names in the banking space, financials, insurance, still under pressure. The focus right now on private credit is now going to start to spread into the insurance industry and the reinsurance industry. And I'm going to break that down later today in a fantastic interview that Josh Brown did last night covering the insurance space. 8 p.m. deadline is tonight. Now, people, what do we know? Do we know anything? Well, I guess a bunch of people bought, CFO bought Shoe Carnival, which that's exciting, I guess. We saw a sizable move on insider buying to selling in real form documents, right, with filings being filed on March 31st. That's important, but we didn't really see a significant change in dollar to buying to selling ratio overall. The move index is really the key thing that we're watching right now. It has moved from 108 down to 81. Most recent move from 95 to 81 usually means something is happening behind the scenes, but that hasn't really hit the wires yet. The FNGD and the FAZ both pulled under those 20 days. That's important. Today, somebody probably knows something. Even partial Hormuz reopening resets the inflation expectations a little bit. We have the CPI and the CPE numbers coming out later this week. We just have to we're in a holding pattern. So either the pattern breaks here or the next leg lower delivers the flush. Don't get ahead of yourself. The signals are improving, but they haven't been confirmed. We got one more day probably of watching, but somebody's positioning for what is coming. We're going to see what happens tonight. Let's just be cautious. Let's continue to just enjoy our lives and watch baseball. That's all I can continue to recommend. That is my prescription for you. I hope that everybody has a great trading day. I will be around if you have questions. I have a piece coming out later today on the insurance companies and the reinsurance companies. That's where the focus is going to be. Once again, any questions, you know where I am. I hope that you all stay positive. Enjoy your day.